You became a freelancer so you could spend more time doing things you love, not dealing with things like taxes and insurance and accounting and investments. But unfortunately, an essential part of being a freelancer is managing kind of the business and the financial side of everything. And being a freelancer and business owner myself, I know what it's like trying to balance kind of the creativity side of things while also doing the client relationships and managing sales and marketing and actually doing the service and the work itself. Like, it's really hard. But if you're able to avoid a few of the mistakes we're about to talk about, you'll be able to spend more time on the things you love and less time trying to figure out the best ways to manage your money. So the first mistake is not separating your business and your personal bank accounts. Whether you're a full-time freelancer or you just kind of work on projects on the side, if you're getting paid from your work, you want to have separate bank accounts for the business income and the business expenses and your personal income and your personal expenses. And the main reason you want to do this is because when it comes tax time, you want to be able to see which income came from the business and which expenses from the business can be written off. And if everything you do is kind of just all in one checking account, like if you bought something off Amazon and then you had a subscription expense for your business, like just going through all those transactions would be really confusing. So having separate bank accounts helps a lot. And contrary to popular belief, you do not need to have a official business set up to be able to get a business bank account. Like if you're just operating as a sole proprietor, it's just you. You can get a business bank account through some banks with just your social security number. There's a few extra steps you have to take, but there's nothing stopping you from just opening another checking account, another savings account specifically for business things. Like they'll have their own routing number and account number so you can easily tell them apart. But if you've set up your freelance business as a legal entity, like a single member LLC, then you can open a business bank account at any bank as long as you have your EIN number, your employer identification number, which is just like a social security number, but for a business. For me, I use Charles Schwab as my personal checking account. I use Marcus by Goldman Sachs for my savings accounts. And right now I use Novo for my business bank accounts, but I might switch over to Creative Juice because it's just a bank that's focused more on creators and I really like everything they're doing. And the second mistake is not setting money aside for taxes. So as a freelancer, you're most likely not having taxes taken out of income like someone who works at a 9-to-5 job does. So it's on you to withhold that money from each payment you get because you don't have an employer doing it anymore. And a general recommendation is to save about 25 to 30% of your income, put that aside for taxes so you can pay your quarterly tax bills. So let's just say you made $4,000 a month. You would want to set aside about $1,000, maybe $1,500, put it in a separate savings account, don't touch it, just kind of let it sit there for tax time. And if you oversave, it's okay. Like you can just pay yourself out of your savings account at the end of the year and kind of just treat it as a bonus. But if you undersave, you'll either have to kind of take more money out of your income that month, dig into your personal savings account, but make it a habit that whenever you receive income, you automatically transfer at least 25% of it over into a separate savings account. And if you have consistent income, like maybe you have a couple clients on retainer and you know exactly when you're going to get paid every month, you could even set up an automatic transfer within your saving or within your bank account, maybe within the app or on the website, to automatically pull a certain amount of money on a certain day every month. If you knew you got paid $4,000 on the 30th of every month, you could set a transfer so maybe on the 2nd, give it a couple days so the payment clears. You could set up an automated transfer so on the 2nd of every month, $1,000 automatically gets pulled from your checking to your savings account. And I'm a big fan of automation because it just removes the human error from things like I would forget to transfer money all the time and just set it on autopilot and don't really have to worry about it anymore. And the third mistake is not using an accounting software. And this kind of plays back into point one when we were talking a little bit about the bank account, so you can see the separate transactions and kind of be prepared come tax time. And whether you keep track of your expenses in a Google Sheets or a Notes app, an accounting software is going to be a super helpful upgrade. You can easily view reports such as your cash flow flow and your income, you can send invoices, and you can keep track of everything for when it comes tax time. And the two accounting softwares that I normally recommend are QuickBooks and Wave. QuickBooks is the classic accounting software, like every accountant knows how to use it. It's a little expensive. It's like $25 a month now, I think, which is why I switched over to Wave. It's free. It does the exact same things. And the reason you want to have an accounting software is just so you can keep everything on the business side of things in order. Like when it comes tax time, you'll be able to see all your expenses and things that you'll be able to deduct. And deductions are one of the easiest ways to lower your taxes, and we'll dive into that in a future video. And the fourth mistake that I see from both new and experienced freelancers is not investing. And when it comes to your money in your life, like investing is one of the most important things you can do, and it really does need to be done. And before your eyes glaze over, like I'm not talking just about the stock market, because investing just means putting money to work now for a better result in the future. And this would include your money, which would be like traditional investments, yourself, and your business. So as a freelancer, your income is kind of tied to your skill set. So an investment in yourself could be investing in a course or a coach or a community of freelancers, because by doing so, you're growing your network and growing your skill set. And over time, these investments are going to play out with more opportunities and better skills and just more confidence as a freelancer overall. But then on the flip side, there are the traditional investments that nobody really likes to talk about, like stocks, bonds, ETFs, mutual funds, all the boring stuff. And as a freelancer and someone who's self-employed, you have a few accounts available that are specifically designed for retirement savings, such as a Roth IRA, a SEP IRA, a simple IRA, or one of my favorites, the solo 401k. And these can generally be opened at the large brokerages such as Charles Schwab, Vanguard, TD Ameritrade, places like that. And the last mistake I want to talk about in this video is mistake number 5, not building a safety net. Whether you forgot about an annual insurance payment or you have to replace your laptop, you want to have savings available for unexpected expenses like this to avoid taking on any credit card debt or selling off any investments. Generally, it's recommended to have 3 to 6 months of your personal living expenses saved up in an emergency fund, and an emergency fund isn't a special kind of account. It's just a savings account that is specifically designated for emergencies. And emergencies would be things such as unexpected medical expenses or car repairs or income replacement or whatever else really that life decides to throw your way. But as a freelancer, even though it's recommended to have 3 to 6 months saved up, I usually try and push for 9 to 12, just because I'm sure, as you know, income isn't always regular. So it's nice to have a little bit more saved just in case you have to bridge a few months of income if you lost a client or if you're still just trying to grow up your business. I actually learned this firsthand because last year, back in 2020, actually it was like the week before Thanksgiving, I live in Kansas City and my car was stolen, and at the time I was using my car to do DoorDash to cover my bills. And long story short, it was found a week later. It was completely wrecked. They stole the back seat out of it. There was meth all over it. It was a mess. But luckily I had just enough in my emergency fund that I could cover the cost of the repairs and be able to start door dashing again. But had I not had anything saved up in my emergency fund, I don't really know what I would have done, because I needed the car fixed to be able to earn money, and I didn't have any money, so I probably would have had to take on credit card debt, and then that would have put me in an even worse spot. So all of that to just say an emergency fund is super important and definitely one of the first things that you should kind of get set up. I generally recommend 2 different places to set up an emergency fund, either at Ally Bank or Marcus by Goldman Sachs. You can do it at your normal brick and mortar bank, but these online banks offer higher interest rates, so just by simply opening one, you're going to be earning more on your money. But that's all I really got. I mean, I think there are few better careers than being a freelancer. Like, there is so much freedom that comes with it. You can charge what you want. You can work with who you want. But there are some complexities that kind of do need to be taken care of on the back end as well. And as long as you're able to avoid kind of 5 of these key mistakes, you'll be well on your way to being a successful freelancer and not really have to worry about the business and the money side of things. But that's all I got. Thanks for watching, and we'll catch you in the next one.